Let's welcome on board then Arnab Banerjee as well, MD and CEO at Ceat, to talk about how their performance has been. Remember, they've acquired the Michelin-owned brand Camso. It's a sizable deal. What does it really bring on the table for them? Arnab, this transaction aligns with your goal to expand internationally clearly. But from the numbers perspective, is this deal going to be EPS accretive? And if yes, can you quantify the impact then?
Yes. It will be definitely EPS accretive over a period of time. Initially, first of all, it will take about 6 months to complete the deal. So we will get possession of the property, so to say, by May, June of FY26. And thereafter, we'll start consolidating this result. So initial period, there is a offtake and a supply agreement with Michelin so that business continuity is mentioned. I think that's a very good arrangement. And when gradually we start getting control of the entire operation, it will be EBITDA accretive first and then EPS accretive. So initial period of maybe 2 to 3 years, we might see a slight dip in EPS, which will come back up.
How do you plan to fund this acquisition? Will this involve raising additional debt? Are there any other financing strategies which are in place?
See, we are in a very comfortable position balance sheet wise now. Debt equity is 0.5 and debt EBITDA is around 1. So, and we have been pretty disciplined in our capex. Last year was only about 850 crores. This year is about 1,050 crores. So for our organic growth, capex requirement will be somewhere in that range going forward as well. So we plan to fund this acquisition with a mixture of debt and internal accruals, maybe roughly in 70-30 ratio. And our projections tell us that we will be well within the board mandated ratios of debt equity and debt EBITDA. So there's not much stress there. And organic growth capex also may not be impacted, even if there are a couple of low margin quarters for us going forward.
Right, morning. Tell us how the acquisition is going to contribute to increasing your export share and boost the off-highway segment's contribution to your overall revenues.
We have been stating vocally that we would like to raise our international business contribution from about 19-20% currently to about 25% saliency in 2 to 3 years. So when we get this business in, straight away on day one, our international business contribution would cross 25%. And of course, this is value accretive, EBITDA accretive, so that will contribute to the overall margin accretion of Ceat consolidated. And looking at OHT business, it will almost double in turnover post this acquisition. And we expect it to be almost again 23-24% of our overall turnover right from day one and progressively improve to 27, 28, 30% even over the next 3 to 4 years.
Right. We also understand that Michelin acquired Camso back in 2018. And, this was at an EV to EBITDA multiple of over 8 times. Is your deal priced similarly, or does the growth trajectory justify a higher valuation, you think?
The CY23 turnover is about 200 plus USD million, 213, if I remember correctly, million USD. And the EBITDA was around 20%. So even though there may be a temporary dip, we expect this to be a high EBITDA business, strong high double-digit EBITDA business, if not 20%, and may cross 20% over a period of time. So I think if you look at these figures, this is not highly valued, it is fairly valued. And it was a win-win proposition. The deal price, both seller and buyers are happy and look forward to get a good ROI on our investment over a period of time.
With the recent change in the government in US, do you anticipate increased demand for construction-related products from that geography? What are your growth expectations in other regions like Europe and LATAM?
See, the entire production currently is in Sri Lanka, and we have a headroom of about 35% odd to further scale up in the same Sri Lanka plant with minor investments, no major investments. And Sri Lanka, you would understand, is the last country perhaps to attract any kind of punitive duty. So most of the duties are targeted towards China and some countries in Southeast Asia, maybe Mexico. But I think the Sri Lankan production will come maybe last in the queue. So we look forward to it as a low risk event. Even if it is, I don't think it's going to come in anytime soon.
And rubber prices have declined by over 20% in Q3 to date. Do you think that this trend is going to continue, and how are you looking at your margin improvement in terms of basis points? Do you anticipate, what is it that you're anticipating for Q3?
We have inventory, and it takes time for everything to pass through. Though domestic rubber price went up, shot up actually in Q1 and Q2, and now sort of coming down. Tapping season is upon us, and so we expect this price to be soft. However, international rubber price have climbed up from Q2 to Q3. So in balance, we have to see how the mix goes. The pass-through of lower crude prices have not yet happened on crude derivatives. So overall, I think Q3 raw material prices will be flattish compared to Q2 raw material actuals. And we may see some softening of overall raw material basket that we consume from Q4. So too early to say what will happen to margins. We'll have to wait and watch.
Right. In the second quarter, you had mentioned plans for further price hikes in the third quarter across your portfolio. Have you implemented any price increases, and if so, in which segments?
Yeah, we have taken price hikes in truck bus radial segment, in passenger car segments, and in OEM it is indexed. So in OEMs, we have got about 4% price hike roughly on an average across categories. So we would be looking up at opportunities also to take up prices in our international business. So we are not done yet.
All right, Mr. Banerjee, appreciate your time. So glad you could join us.
If you like this video, then like, share and subscribe to ET Now.